Hargreaves and Lansdowne in the UK found that women investors averaged 0.81% more than men in their returns over a 3-year period. And if that was sustained for 30 years, the average woman would end up with a portfolio worth 25% more than the average man.
Women make the decision to purchase 94% of home furnishings, 92% of vacations, 91% of homes, 60% of automobiles, and 51% of consumer electronics. So basically these marketers were saying, hey, like a strategy moving forward might be target these women because they have a bunch of money and they spend a bunch of money and they're not really being addressed by the current way that we're advertising.
Women invest endlessly from the word go. They invest in their education, their careers, they invest in their community, their friends, their family, their kids, everything. Everyone who has a woman in their life sees that they invest heavily in their stuff. So it's quite ironic that in the matter of stock investing, historically women did not engage.
I just want to give a quick word from our friends and sponsors at Vodafone Business. I used to think of Vodafone Business as only a reliable provider of mobile and broadband needs, but they're really stepping up to help Irish businesses grow and flourish in an increasingly digital world. So they now offer a whole array of digital apps, from productivity tools and security solutions to IT support and even website builders. More recently, Vodafone have launched their VHub digital advisory service. With its new service, Irish businesses of all sizes can get free one-to-one digital support and advice tailored to their business by simply booking a call with one of the VHub digital experts on the Vodafone Business website. Search Vodafone VHub for more information. Anne-Marie, Emmet, welcome to another episode of Stock Club. Good to have you both. A bit of a bittersweet episode today. Anne-Marie, you're leaving us for a bit, so this is your last episode of the year, I think. Is that a fair summation?
Yeah, I think so. I'm going, maybe wandering is the correct term rather than traveling, because not all plans have been established yet, but I'm definitely going to some music festivals. I'm going to go to Spain for a bit with my friends, and then I'm going to go home to Colorado and do some traveling around the US and just kind of chill out for man, I'm exhausted. You know, I'm 26. It's all hit me now.
Yeah.
I think it's time for the first retirement, I think. So
a quarter life crisis.
Yeah, which I did not label it that. Emmet did. So
yeah. Because I had a QLC at 26. I went in and I resigned, and my employer was like, "No, it's okay. We'll figure it out." And that's how I want to pay it forward. But I went down to New Zealand and lived down there, as I mentioned to you guys. I think it was 2002, so 21 years ago.
Nice. Yeah. I packed it in and moved to New York at about 25. So yeah, it all fits. It's about that age.
I'm scheduled. Yeah, I'm due. So we'll see what happens.
Yeah. So your last show of the year, we let you pick the topic, and that was a very important one. I think probably one we don't discuss enough, and that's women in investing. So maybe more accurately, the lack thereof of women investing, which is the unfortunate side of things. So women invest much less than men, but a number of studies have showed they actually make better investors. So Emmet, you have a very interesting story from the leaders at Charles Schwab about this, and I think it's worth retelling today.
It certainly is, Mike. Back in 2013, John Tyrrell and I went to America to figure out our US brokerage offering, and how would we extend a brokerage capability to MyWallSt customers. And Enterprise Ireland, who is a backer of ours, was willing and able to open more or less any door we requested. And as some of our listeners know, Enterprise Ireland, or EI, is the government organisation here responsible for the development of Irish enterprises in world markets. And they have a network absolutely everywhere. It's unbelievable. Another year, John and I were down in Australia, and Enterprise Ireland could get us anywhere. Anyway, so it's pretty unbelievable how omnipresent they are in the world of enterprise, which was very useful for us in the earliest days. Anyway, one of the introductions made from EI came in the form of John Tyrrell talking to Charles Schwab, like Chuck himself.
The Charles Schwab.
Yes, whose namesake business is now a $110 billion company and one of the largest retail brokers in the world, maybe the largest, but it's an absolute behemoth. And all of our listeners have heard of Schwab, because if you're listening to this podcast, you'll have noticed them. What's remarkable about that phone call between JT and Schwab was that, number one, I pulled in so that he could talk in silence, which involved him walking into a giant pumpkin field for the purpose of doing so. And I mentioned that on this podcast before, and I think we posted the picture somewhere. And the second thing that was remarkable was, of course, he was talking to Chuck. But in fairness, at that time, they were a bit small. They only had $2.25 trillion in client assets and 9.1 million active brokerage accounts. So they were tiny. It was way back in 2013. Anyway, what John was told was that when they looked at the historical investment performance of men versus women with that ginormous data set, women outperformed men because, in short, they were less likely to fiddle with the stocks after every little piece of news. Again, on the whole, they would allow the seasons and years to roll by without trading, where men, on the other hand, were, shall we say, more vulnerable to buying and selling on rumor and news, whereas women sat tight. And despite that, we also learned that women are more risk averse than men.
And that is that like rooted in fact, or is that opinion, or?
No, the risk averse thing is there's endless studies on the notion that women are generally more risk averse than men, especially in financial matters. And I have a few here to list off. The first is Barber and Odin in 2001 conducted a study called Boys Will Be Boys, Gender Overconfidence and Common Stock Investment. And they found that men trade 45% more than women, reducing men's net return by 2.65 percentage points per year compared to women. And this higher trading activity was attributed to overconfidence in men, indicating that women's relative risk aversion led to a more stable investment strategy. A few years prior to that, in 1998, there was a study by Sundin and Surette which found that women are more likely to choose guaranteed income streams such as bonds, whereas men are more likely to invest in riskier assets. And in the same year, in 98, there was another study by Giacampos and Bernasque, which published a study that analyzed the relationship between gender and risk aversion using data from the survey of consumer finances. And they found that single women in the study exhibited far greater risk aversion in their financial investments compared to single men, which is understandable. And then even more recently, in 2011, Domen et al. Found that women are more risk averse than men across various domains, not just financial. However, they also emphasized that the difference in risk attitudes between men and women might be influenced by cultural, societal, and educational things. And again, it was a big survey. And again, it was not shocking. There's so many surveys and so many really academic papers on this matter. In 2012, Charnas and Nisi provided evidence that women tend to be more risk averse than men in financial situations. But these differences are context dependent. It goes on and on and on. Another deep study in 2008 said it had found it was by Cardens and Carpenter, had this controlled experiment that found that while women were more risk averse than men, the difference was more pronounced in patriarchal societies compared to matriarchal societies, which suggested that all the norms we see and structures play a role in shaping risk attitudes. And even Anne-Marie and I were chatting yesterday, and she told me that Hargreaves and Lansdowne in the UK found that women investors averaged 0.81% more than men in their returns over a 3-year period. And if that was sustained for 30 years, the average woman would end up with a portfolio worth 25% more than the average man. And all of this, I could go on and on and on, but I guess the point is that this is not really a surprise to anyone, really. It's just not. I mean, if you grew up in a traditional homestead with a male and a female, it's more likely that the male was more involved in at least contemplating stock investing. I think that's hardly a shocking insight.
So what do you do with that information then? Because there's a lot there to take in.
There is. I mean, that's a very good question, because John and I figured that the right thing to do 10 years ago was to launch a product that gets the world's female population investing successfully. So when we were in our kind of fact-finding stage and we realized that women are, as a matter of fact and data, better investors, but they are far, far less likely to do it, it felt like a blue ocean strategy for us to go and address. But the more we considered it, I think the less credible it felt as two, white Irish guys, which is just a fact. And also wrongly, perhaps, we didn't want to launch a pink biro. At that time, BIC in South Africa posted an ad on its Facebook page to
Mm.
celebrate Women's Month. You know this one, Anne-Marie. And
Mm.
it showed a smiling woman in a suit with her arms folded, and it read beneath, "Look like a girl, act like a lady, think like a man, work like a boss. Hashtag Happy Women's Day."
Yikes.
It was
That's the
atrocious.
that's the real girl boss attitude there,
Oh,
Emery, isn't
Yeah.
it?
I
Yeah,
mean,
they
it's
also that corresponded with them releasing pens for women, which
that
were
was the one. That was
yeah,
the one.
they were just pink, and I think they tried to argue. They were like, "We've made them for women's hands," and it was a
They
pen.
did. Oh yeah, that
Yeah,
was the marketing campaign, and that was a hot thing then. I mean, it was absolutely outrageous. I think, I mean, anyone with the brain in their head looked at it through the fingers on their hands, going, "Please, no, make it stop." I mean, we were very sensitive then at that time to building a product that could be even vaguely accused of mansplaining. I mean, it's not in our nature. We didn't want to do that, but a product just for women wasn't right for us at that time, despite the fact that the opportunity was there. Two white dudes from Dublin, from Galway and Dublin,
Yeah.
building a product. It
Ooh.
just was wrong.
Yeah, there's a bit of virtue signaling maybe to it as
Yeah,
well. Yeah,
yeah.
yeah. So what's your view on female investing today, 10 years on? What have you learned in the meantime?
Well, what's ironic is that on the whole, women invest endlessly from the word go. They invest in their education, their careers, they invest in their community, their friends, their family, their kids, the gym, sports, yoga, kickboxing, their parents, everything. Everyone who has a woman in their life sees that they invest heavily in their stuff. So it's quite ironic that in the matter of stock investing, historically women did not engage. Every woman is an investor. It's in front of our eyes. It's there to be seen. Women are naturally investors. And when we have a Horizon get together, as you both well know, the room is about 80% male, at least, maybe 90%. Last year's, what would you guess? Last year was about 90% male in the room?
Yeah, it's not
yeah,
far off. I think Anne-Marie and
Yeah.
Zoe and Nicole probably made up a bit of the
yeah.
Yes, that's
numbers as
right.
well. Yeah.
Yeah,
Yeah.
that's right. So certainly as a company, doing nothing to gender tilt the table where we were neither a pink bic or a man only club, we've seen more males naturally arrive to our product set. There's nothing in our branding, nothing that says man, nothing. Like I remember at the time when we were looking at our branding and what we stood for and our logos, our color palette, there's a load of brands out there that are clearly alpha male, like eToro, two big bull's
Yeah.
horns coming out the side of
I
its
was about to
logo. And
say that the big bull is the real,
yeah,
you
I know.
know.
Exactly. And
Yeah.
then there's others like plus 500 that just, there's nothing about it. There's brands out there that they very clearly have put themselves, tilted the table to be more appealing than to a traditional male, if you like. But we, without doing that, have seen more males, which I think is a pity because, as I said, women are better investors, and that's just a matter of fact.
Hmm. Before we move on, then I just remembered from that story with Chuck Schwab was I
Mm.
remember it was always women were better investors than men, but wasn't there a third category that were the best investors of all? Do you remember this?
The deceased, was it?
Yeah,
Yeah, yeah, they
dead
are
dead
the
people had
best.
the best returns out
Yeah,
of anyone in the
that's right.
Chuck Schwab
That's a fact.
database.
Yeah, that's right. Because they never sell.
Yeah,
And actually, it's funny because there's so many pieces of literature I've read over the years where the author, who almost invariably was a man, would say women make better investors. And I dived into the subject just to get some facts, which I blurted out there a few moments ago. But like my favorite, or one of my favorite investing books, One Up on Wall Street by Peter Lynch, he talks about his wife found his best investments, and the way I suppose the way he describes it, I suppose, is a little bit culturally outdated, the way he uses his tone of voice and the way he describes it, but is meant in the highest regard possible. Um, And and that was an anecdote. He said, "My wife found legs
Yeah.
pantyhose, and she told me about them." And those anecdotes led to him investing in, what was it, La Jolla motels or something like that, and all these different kind of products that she had insights that he otherwise didn't have, while sitting on the top floor of Fidelity eating prawn sandwiches, at 12:30. So, but really, when you kind of take that, he was on the money, and he was right. And big data has proven that women make better investors, but marginally pipped by the deceased. R.I.P.
Oh, coming second to a group of dead guys.
To be fair,
we
that's
will
the
outperform the
true.
dead.
To be fair, that's the true blue ocean opportunity. There is an abundant amount of dead people in the world. How do you get in there with that? What a market, untapped.
Well, there's ads on
Oh,
TV for getting yourself ready for when the Grim Reaper arrives.
Mm.
There's this for only $2.99 a week, we'll make sure your funeral is paid for. Maybe we should do something for only $5 a week. We'll invest in tomorrow's giants today.
oh, stuff. Before we get too macabre now, I'm just going to give a quick promo to our newsletter, Charging and Fearless. So we're delivering to your inbox one of the most unique products on the market, and it's completely free. No one else is covering the markets we've covered with Charging and Fearless, where we deliver to you a new weekly stock pitch that could be from Amsterdam, Tokyo, Paris, or somewhere in between. So it's a completely free stock pitch every week. You'll have it read in about 30 seconds flat, and we can almost guarantee most of these companies are going to be brand new to you, which is where you get an edge. So sign up now in the show notes for this episode.
Mike, I want to
Right.
come in on that because I want to talk about Charging Fearless for 20 seconds, because I know most of our listeners have subscribed completely free. Occasionally, you might have to scroll past an advert. Don't worry, there's no drama there. But when we designed that, or when I sat down to figure what could we send out, I was inspired by Scott Galloway's weekly email, which is called No Mercy, No Malice, because the information in that email, you can't Google. Well, you can, but you could piece it together. But it's just a beautiful, succinct opinion that was absolutely original. So the inspiration for Charging and Fearless was a beautifully succinct, completely original, not Googleable piece of content that adds true value. And I think we've delivered it. And the one thing I just wanted to say is that we have a pixel at the very bottom of the email, which means that 60% of nearly 100,000 people read the whole thing. And just for industry standards, kind of to get maybe 10% read rate or 20% is good. To have 60% of people read the whole thing is my way of just saying to our listeners, it definitely delivers value. So just sign up. I'm so proud of that product. And I have to say, hats off to the two of you, because you were huge in its architecture, design, and delivery.
Yeah, I'm very interested in the one Anne-Marie just published. Well, sorry, that is going to be published this week as well. It's a stock. It's a
Cool.
company and product I've heard of a lot, but didn't realize it was a stock. And when you
Yeah.
talk about niche moats, I think this really defines it well.
Yeah.
But
Yeah.
yeah. True to type, Anne-Marie, we've been talking about women investing for 15 minutes now, and it's just been two men on the line.
Yep. Perfect.
So
Nailing it once again.
exactly, yeah. We're
Yeah.
perpetuating all the stereotypes. We're talking over
Yeah.
you.
Yeah.
But no, we're saving the best to last, is how I put that, because
Yes.
I feel like Emmet would be a tough show to follow. Or sorry, you would be a tough show for Emmet to follow if we did it the other way around. So
Good catch, Mike.
yeah, I'm hoping. I realized halfway through, which is awful. When we're talking about dead people, I'm like, we're talking about women investing here. There's two men going on it. But so, Anne-Marie, we've heard how women make great investors, but what does female representation look like in the investing world?
It's not great. We're working on it. Yeah. So, as of 2018, a survey by Mass Mutual found that 41% of American women invest compared to 55% of men. And that's all people of all ages. So you might be like, okay, fair enough. Like, probably women above the baby boomer generation were probably more likely to resign the kind of wealth management, financial planning, retirement savings aspects to their husbands, and were more likely to be kind of handling the at-home finances, which is kind of a traditional view, but we actually have data on that. So you might be saying, well, you know what? It's fine. Younger women coming through, have big corporate jobs. But even for millennials, the stats don't look great. So As of last year, only 26% of millennial women invest outside of their workplace retirement accounts, compared to 43% of millennial men. And a investment account outside of your work account is genuinely anything outside of a 401k. And I know plenty of people, an aspect of their retirement savings has to be investing through like another private retirement account, whether that be like a Roth IRA or something like that. So that's not great to see. We would like to see some more women jumping in there. Also, the way that they're investing, we could probably be holding a meeting about, typically investing 40% less money, which you don't like to see. And they prefer low risk options like bonds and index funds, leaving 71% of their portfolio on average in savings, which, as Emmet just listed off all those stats about being risk averse, they really are when you see it in the numbers. This kind of dynamic is also really reflected in the customer breakdown of retail investment platforms. Emmet just said there, eToro, the big bull, hasn't been the most warm welcome. That's shown in their customer statistics. Only 15% of their users are women. And only 30% of interactive investors customers are women. So it seems like maybe they're all at Charles Schwab. That could be the takeaway from today is Chuck's done a really good job. Which also, as you were telling that story, Emmett, I was like, I didn't know Charles Schwab was a real person.
Oh yeah.
I thought it was like a made up business name that they were like, that sounds like a professional. That can be the name of the company. I thought it was like
And by the way,
Mavis
Amory, I think they had at that time 20% of their base were women. So even when you
Okay,
compare
yeah.
to those two giants that you mentioned today, IB and eToro, they were ahead of their curve 10 years ago.
Yeah, but and I think it is fair to mention that like maybe it's because the women have kind of siloed off into other areas. There's a company I've been quite impressed with that's emerged, I don't know, probably over the last 5 to 7 years, which is called Elvest. And I think Elvest's turn on this is they're going, okay, there are more women in the workplace. There are more women who have really kind of high ranking corporate jobs, are making money. They need to be doing this retirement stuff. And the way that Elvest has kind of propositioned this to consumers is smart, where they've removed investing from this kind of far off world and they've attempted to integrate it more into kind of everyday finances. So they run the entire thing through what looks like a really easy to use banking app, and you can automate a huge amount of the tasks. I know a couple of my friends back home, they have like Elvest credit cards, and rather than getting, like a cashback reward or a travel perk, every time that they spend money through their credit card, it automates an investment process and it puts money in an index fund or a managed mutual fund or something like that. But Elvest, again, is like, it's very hands off for the consumer. No one is picking independent stocks. It's, robo investing, it's mutual funds, and it's paying a pretty hefty fee in order to get that done. But, if it's the type of thing of like the only way to get you to invest is to just kind of have you not think about it, I suppose that's fair enough. And like Elvest has been backed by a number of kind of significant big investors. The biggest one is probably Melinda Gates, who got in very, very early. So there is definitely movement in this space to get more women to participate. But I do think it's probably the urgency with which it needs to be addressed means that kind of some of the onus is going to actually fall on individuals, whether that be women themselves or like people within women's lives who have some aspect of financial literacy, who are going to them being like, we got to start now. Like the time to start saving for your retirement is 40 years beforehand. So, you should be targeting people now.
Yeah. We're talking about like the risk averseness of women. The one plus side of that, I know that means that they're sitting out a bit, but the one plus side of that is I'd say very few women got caught up in the NFT and crypto
Oh,
craze
yeah.
of the last 2 years. You're
Yeah.
talking about 15% in eToro. I'd say OpenSea and Binance, it's about 2 or 3%.
Yeah, actually, I think I had stats on that at one point. I remember doing an FML episode, which was the podcast that me and Nicole used to host before Nicole ran off for her retirement in Australia. That it was something crazy. Like NFT participation was like 95% male.
Yeah,
Like someone had done a survey. It was very, lopsided.
it sounds about right. But what do you think now is the cause of this lack of participation in investing for women?
It's probably two. It's probably economic, and then probably more important now at this point, it's social. In terms of the economics, the most important factor is going to be the wage gap. It's just like having less money to play with and less money to invest with. Back in 2018, on average, an American woman made 81 cents for every dollar a man made, and that meant that their median annual earnings were almost $10,000 less. And then even when we correct for differences in career path, in no occupational category does a woman out earn a man. And some of them, they're beginning to reach parity, which is very nice to see. And actually, there's been a number of companies, some companies which we've discussed in the context of investing, which have really gone out of their way to ensure pay parity. One that I remember particularly is Salesforce, actually. They have like a whole portion of their HR department dedicated to just analyzing wages and making sure that people are being paid fairly. And they released a study last year, and it was something they were like, just due to inadvertent bias, every year they would correct people's salaries, and they would make sure, oh, all of these computer scientists, they all need to be on the same pay. So if someone gets a raise, they would just increase everybody else around them in the
Yeah.
department. And it was something that they basically said, we have to correct wages every 3 to 6 months, because it just happens that because of probably socialization, men were just either better at going in and asking for raises, or they were better at just getting them from their managers. And so the HR department was behind the scenes constantly just like micro increasing everybody's salaries to make sure that there was parity. So there is a lot of work going behind that, and there is companies and
Yeah.
sectors that are doing well. So I do
There's
think like,
that awful argument where, oh well, the pay gap is there because women choose different jobs.
yeah.
So men choose to be computer scientists and engineers and doctors, and women choose to be female computer scientists and female
Yeah.
engineers and female doctors.
Yeah, I also really hate that argument, because they always turn that around, and they'll be like, men's skills are scalable. They'll be like, oh, they're a computer engineer, they make software, and that is scalable, so they get to make more money because the businesses make more money. And I'm like, well, women are nurses and teachers, which is technically also scalable via the people that they interact with. And also, who is saying that nurses and teachers shouldn't make more money?
Yeah,
Like, who's standing there being
that
like, I
that
think the computer engineers should
that
make
is
more?
a dangerous hill to die on.
Yeah.
Yeah,
So anyway, so we would love pay parity. That would be great. If women had more money, they would probably then just have, it would be like less difficult to say, do you know what? Yes, I will set aside $500 a month, and I will put it in a retirement account, and I will invest with it, and some of it can go into individual stocks. So I think like that's number one. But it's something insane. Like, if we continue with the current rate in which we're trying to reach pay parity, we're going to reach it in like 93 years. So that we can't wait. This it's too, we got to do some other things. So then the kind of number one way that we need to address this, particularly if you are a woman yourself, or you have a woman in your life who you would love to start investing, or maybe you have a daughter that you're like, she needs to know this before she goes off and gets a job, or she has the money to do so. It's just kind of exposing women to investing and talking about it and making it a little bit less scary. So there's like a bunch of studies on this. There's like a statistic where they say, oh, women are rational investors, but then sometimes that term is expanded out to say that they are recklessly cautious. And so how do we educate women in a way that gets them away from this recklessly cautious mindset? And Charlotte Young, who she started a charity called Girls Are Investors in the United States, she said that the number one thing is just providing a place to talk about it, and maybe creating lessons that can be integrated into a classroom, or even, easy programs, even kind of like our Learn app, even just sending the Learn app to someone to be like, hey, sit down, make your way through this. This is super easy. And she found that women are taught that the route to financial empowerment is via budgeting, while men tend to be taught about investing at a younger age. And this is reinforced by statistics that she had. Only 29% of women reported that their parents showed them how to grow wealth beyond simply making a salary. So it is that thing of like, they're like, dads aren't sitting down and being like, this is how I set up my Roth IRA. The other reason is probably, we can sit here and say, oh, you know what, if you're being taught about investing outside of a classroom, there's a pretty high likelihood that a woman, depending on what phase of her life that she's in, she actually might not have the time to do that, because it's like 75% of unpaid labor within the home is done by a woman. So, while the men are off reading about NFTs and buying NFTs for 12 hours a day during the pandemic, there's a likelihood that a woman maybe wouldn't be in that position. And that again is enforced through statistics. It was something like, after the pandemic, it was far more likely that a woman had to exit her career in order to care for a loved one. And it meant that like women's participation in employment had dropped after 2020 and 2021. So like, they're just kind of these exterior factors that mean that like prioritizing investment education probably isn't at the top of your list, which I think actually means that we should be doing it younger. You should be doing it before kind of these obstacles come up. You should be talking to your teenagers about it. You should be talking to people in their 20s about it. Because once we have that education in place, things go pretty well. So only 46% of millennial women reported feeling confident about their ability to invest. But once they started, 77% of those women feel that they will be able to accumulate enough money to support themselves for life. So it is that thing. If it's just the first step, like it's just getting out the door, it's just setting up the account, it's just making the decision to say, okay, I'll do this. I'll put in $100 every month. And like, to be honest, like, I also think we need to be better at just kind of granting people the good enough, like, this is good enough. Like, we talk a lot about, you can beat the market, you could buy individual stocks, you can kind of tap into companies that and interact with. But at the end of the day, if you're super, super busy, I think it is completely acceptable to set up a retirement account and just say, I'm putting money in the S&P 500 every month, and I will re-examine this in 5 years. And I think that's fair enough. Like, that is 100% good enough, particularly if you're in your 20s or 30s, because you have such a long runway. Like, you are going to accumulate, like, life-changing wealth, generational wealth that you will leave after you die. And then maybe make more money after you die, because it will continue to perform, as we have learned.
With our new product.
Yeah. My Wall Street death.
My Wall Street death. Oh, stuff.
Yeah.
It's funny you say that, like, that's the number one rule, number one golden rule in My Wall Street is just get started. That's the kick you need, is just to make that from 0 to 1. And then from there, you don't, exactly what you said, you can just index fund, you can be very sensible, or you can dive headfirst into it. There's so many levels of what you can do, but to get started is the most important thing. Yeah. So you mentioned the lack of confidence and exposure as a barrier to women beginning to invest. So what kind of things do you think will motivate the next generation of female investors to jump in and to get started?
I kind of mentioned some in the previous question, just education. I think a big thing that myself and Nicole always used to talk about was just talk to your friends and your family. If you're kind of already on the inside of the bubble and you're already investing, you should feel an onus to be like, okay, I know, like, so-and-so isn't investing. I know they're not financially planning. Maybe I'll go talk to them, just to, again, make it even easier to take that first step to go from 0 to 1. But something that I've been thinking about recently is maybe like grounding those discussions around the idea that the stock market is not entirely separate from us. Because I think sometimes particularly if you come from a family where maybe investment hasn't been done before, it hasn't been something that you've talked about, it can feel like the stock market is something only wealthy people do, and it's really far away from you, and it's not integrated into your economy at all. And so I think by thinking about stocks as businesses in which you interact with and picking stocks that way, I think is a great way to demystify it for yourself. And, like, women control a lot of spending power, as like they have entered the workforce more and more, and they have big high powered jobs. They do like push forward a number of industries, as Emmet was saying, Peter Lynch saying, oh, I found investments through my wife because she was exposed to these companies that I would never consider because, they're targeted at women. Like, there's a lot of businesses like that today that do fly under the radar. And because, a lot of financial analysts tend to be men, it takes forever for people to go and find them. Like, there are companies like that right now that women probably know about, men don't. I don't think this is it's not too kind of distant from us. And this is something that myself and Nicole talked about in terms of a Becky Fund, which was an idea that was floated probably like 4 years ago. And it's a shame that we didn't coin it ourselves, because it is quite a good idea. And the basis for a Becky Fund was a Harvard Business Review study that was done back in 2009. So it's a while ago now. And they weren't studying stocks. They were studying marketing trends, because they noticed as like the economy has shifted up and more women have gone into corporate America and they go into, like tech or medicine, and they make a lot of money. It meant that there were these women who were kind of at the top of the economic table, who were making a lot of money, but who then also were spending a lot of money. And they had like a disproportionate amount of spending power. And these women, so they make up 24% of the female population in the United States, but they control 34% of female purchasing power. And in some sectors, it's crazy how much power they have. So women make the decision to purchase 94% of home furnishings, 92% of vacations, 91% of homes, 60% of automobiles, and 51% of consumer electronics. So basically, these marketers were saying, hey, like, a strategy moving forward might be target these women because they have a bunch of money and they spend a bunch of money. And they're not really being addressed by the current way that we're advertising. And that was kind of an interesting idea. And then an investment analyst saw that and said, do you know what? There's probably stocks like that too. So this got the attention of some investment analysts that were like, do you know what? There's probably a way for us to pick stocks the exact same way. So they dubbed these high spending women who have a bunch of money, they dubbed them Beckies. And they were like, what companies do Beckies like? And then that caused a huge debate online. Someone was like, there are 72 Becky stocks, but there's probably less than that. It's probably about 25 or 30. So then I sat down like 2 years ago and was like, okay, let's pick out a few Becky stocks that were stocks that we also talk about all the time on MyWallSt. And I assembled a really short list. So it was Apple, Chipotle, Etsy, Facebook, Lululemon, Netflix, Pinterest, Peloton, Shopify, and Starbucks, which, those are all companies that we interact with all the time. Women interact with them all the time. And if we created a little portfolio and we added in just $100, when we initially started talking about those companies, which for a lot of them, we started talking about them when MyWallSt was launched, the consumer facing side back in 2015, like Apple easily, Chipotle easily, Facebook. Yeah. So as of right now, starting in 2015 and just putting in and just putting money in, leaving it, that fund would be up 250% compared to the S&P, which is up 85%. And even if you took Shopify out, which I would admit maybe someone who doesn't want to do any investment education wouldn't pick Shopify because Shopify is like a back end player. They're platforming. Even then, the fund is up 175% versus 85% of the S&P. So by just picking companies that you routinely interact with, some of them are going to be bad. Peloton, bad, but most of them are up. And most of them doing pretty well. So I think that's a good way to kind of approach women who are on the boundary of considering investing. This is not too separate from you. These companies are stuff that you go to every single day. You probably shop for them. You probably own their stuff. You probably like them. And that's a really easy way to start investing.
It's really interesting because that's the exact Peter Lynch ethos that keeps coming up throughout this conversation is investing in what you know. And let's use Lululemon as an example. Do you know what I mean? When that maybe first hit the scene and was going crazy, that was definitely isolated in just women's yoga pants.
Oh yeah.
Analysts would have been way behind the curve there, and that would have been the legs moment of this kind of modern era, say. And that's a $50 billion company now. You can extrapolate that out to any number of companies.
Yeah. And I often think we're now in the age of the women's economy. I think it's gonna get even bigger. They're saying that recession was prevented in America because of the Barbie movie and the Taylor Swift tour of this summer. And so I think it's women, I think, are better at spending. And sometimes they spend in, these discretionary categories. So there are definitely stocks looming there. And now Lululemon is having its second age because men have discovered Lululemon.
Yeah.
They're going, guys, these pants are really comfortable. We should be spending $80 on pants. And so now the stock is rallying again because to be as big as they are and still bringing in 25% sales growth a quarter is crazy. But I think it's a great way to find businesses.
Absolutely. That's great. Okay, before we finish up, I just want to give a quick word from our friends and sponsors at Vodafone Business. So Vodafone have recently launched their VHub digital advisory service, offering Irish businesses of all sizes free one-to-one digital support and advice. You don't even have to be a Vodafone business customer to avail of this service. So search Vodafone VHub to book a call with one of the VHub digital experts, and we will leave a link in the show notes. Right, Emmet, Anne-Marie, thank you very much. Anne-Marie, this is thank you for the last time for a while. So best of good luck in your travels. And thanks everyone for listening. If you want to get in touch with us, you can get us on Twitter at MyWallStreetHQ, on TikTok at MyWallStreet. Simply just email us at pod@MyWallStreet.com. If you enjoyed the show and you have a female in your life who you'd like to get investing, make sure to share it on. You can leave us a review on whatever podcast platform you listen to us on. So thanks for joining us today, and we will talk to you next week.